Opportunities can arise from crisis, just as they did during the tech crisis in the early 2000s. Many internet startups went bankrupt, such as Webvan, Boo.com, and Pets.com, but one company, Amazon, emerged as a resilient winner in the e-commerce space. Amazon's website remained up and running while its peers struggled, leading customers to migrate to Amazon.com. As a result, Amazon dominated the e-commerce category, leading to exponential growth in the user base, revenues, and profits over the next 20 years. Investing $10,000 in Amazon stock during the dot-com crash would be worth over $3.2 million today, demonstrating the lucrative nature of crisis-driven opportunities. This principle is relevant today as we face significant bank crisis. Yet, despite the crisis, SoFi stock presents a fortune-making investment opportunity. Recent weeks have seen the failure or near failure of 4 major banks, including Silicon Valley Bank, Signature Bank, Credit Suisse, and First Republic. This crisis is the most significant financial event since the Great Depression and the 2008 financial crisis, causing most banks' stock to plummet. However, one small neobank is emerging as the potential Amazon of finance, showing impressive signs of strength amidst its collapsing peers. While most bank stocks are declining, this particular bank stock is rising, and we believe its ascent is just beginning. Investing in this small neobank now would be like investing in Amazon in early 2001. We believe that SoFi Technologies, SoFi, is about to do for the financial sector what Amazon did for e-commerce 20 years ago: consolidate and monopolize it. SoFi introducing a new era of digitally focused online banking designed for the modern customers, accessible through a single super app. SoFi aims to replicate what Amazon accomplished with JCPenney and Sears in relation to Bank of America and Wells Fargo, hence its Amazon of Finance nickname. We believe SoFi's effort will be fruitful, primarily because the traditional banking process is unpopular. Legacy banking processes such as account fees, clearing houses, high interest rates, broken digital platforms, confusing rewards programs, lengthy phone calls, and in-person appointments are all time-consuming and expensive. This is primarily due to middleman profit takers and outdated physical processes. What if digital technology could remove these intermediaries? What if someone developed a completely digital bank that used technology-driven process to provide customers with fast, affordable, and convenient financial solutions nationwide? And what if these were all available in a single app that could be used to manage all banking needs? SoFi answering these questions with its new approach to banking. SoFi's story began in 2011 when a group of Stanford Business School students realized the inefficiencies of the student loan financing industry. They saw an opportunity to solve the problem by leveraging automated technologies and creating digitally native platform that could offer cheaper and more convenient access to student loan refinancing. They recognized that the banking industry was weighed down by high property-related expenses which were passed on to consumers. Additionally, student loans were typically structured with multiple middlemen, each with their own fee that the college students had to pay, making the process complex and expensive. SoFi's solution was streamline the process and cut out the middleman by using technology to offer student loan refinancing directly to consumers, and their approach worked. Going back to their super app, this app allows users to manage their money, invest in stocks, ETFs, and cryptocurrency, obtain personal loans, and even earn rewards points that can be redeemed for cash. Moreover, unlike traditional banks that charge monthly account maintenance fees, SoFi doesn't charge fees for most of its services. To sweeten the deal, SoFi also offers a cashback program for users who set up direct deposits to their accounts, further incentivizing customers to choose SoFi over other banks. All of these adds up to a user-friendly and cost-effective banking experience that is quickly gaining popularity among millennials and Gen Z who value convenience and transparency over traditional banking practices. With its growing range of products and services, SoFi is well-positioned to become the dominant player in the online banking space and disrupt the traditional banking industry as we know it. SoFi's success with its student loan refinancing product has enabled the company to expand its offerings to include a range of high-quality, low-cost, and convenient fintech solutions accessible through a single app. These solutions include SoFi Money, SoFi Invest, SoFi Credit Card, SoFi Relay, and SoFi Education. SoFi Money is a cash management account with no account fees, 1% APY, and an attached debit card. SoFi Invest is an attached mobile investing account that allows customers to invest in stocks, ETFs, and cryptocurrencies, including pre-IPO shares. SoFi Credit Card is a cashback credit card with no annual fee that can be linked to SoFi Money accounts. SoFi Relay is a budgeting software tool that allows customers to track and monitor spending across accounts and check their credit scores. Finally, SoFi Education provides educational articles and videos to help consumers learn about finance. By offering all of these features in one app, SoFi is leveraging technology to make banking fast, cheap, and accessible. Thanks for tuning in. Let's get right back to the video. In the midst of the current banking crisis, SoFi has been demonstrating its strength and stability. The crisis has primarily centered around deposit insurance, with many banks struggling to cover withdrawals due to the bad bets on interest rates. However, with the FDIC only insuring up to $250,000, customers with more extensive deposits could potentially lose significant amounts of money in a bank run scenario. SoFi, on the other hand, has remained stable and secure, with no panic or stress seen among its customers. Amidst the current banking crisis, SoFi stands out for its strength and innovation. While other banks are struggling to cover withdrawals due to bad bets on interest rates, SoFi has announced an industry-first FDIC insurance on funds up to $2 million. That's 8 times the national average. By developing an ingenious insurance network with other banks, SoFi is surging through this crisis, much like Amazon did during the e-commerce crisis in the early 2000s. The emerge of the Amazon finance is becoming clear, and it's SoFi. This crisis is turning into a generational investment opportunity for everyone. The recent banking crisis has created an opportunity for those bold enough to capitalize on it. SoFi is the emerging leader in the new generation of banks, and it's dubbed the Amazon of finance. While the traditional banks may be struggling, SoFi is surging ahead. Investors who buy dip now could see returns similar to those who invested in Amazon during its dot-com crash lows. In addition, SoFi's innovative insurance network with other banks has allowed it to offer FDIC insurance on funds up to $2 million, 8 times the national average. The future of banking is changing, and SoFi is at the forefront of this change, making it a potential lucrative investment opportunity. Now, you may be asking yourself, should I invest in SoFi? With FDIC insurance up to $2 million, a growing ecosystem of low-cost fintech solutions, and a strong position in the emerging banking sector, SoFi is undoubtedly a company to keep an eye on. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and hit the notification bell to stay up to date on our latest videos. And remember to do your own research before making any investment decisions. Thanks for watching. This is Jules, and I'll see you in the next video. If you want to know more reasons why SoFi is skyrocketing this 2023, check it out in this video.